Hi class, and welcome to this video, which is going to focus on how we record transactions, relatively simple transactions, in the general journal, and also how we post those to the general ledger. This is going to cover simple transactions, so it's an introduction, and I hope that you really understand the process of using debits and credits and double entry accounting in the general journal and general ledger. What do I hope that you gain from this video? In terms of our learning intentions, by the end of this video, I hope that we can tick off that we are able to describe the role and characteristics of the general journal and general ledger. And more importantly, potentially, we are able to understand and apply debits and credits and transactions in the use of this journal and ledger. We will have a successful video, and most importantly, you can tick off the success criteria if you do some study afterwards and some exercises. If you can say, I can record transactions that require recording in this journal and ledger. So that's what we're going to focus on today. So let's now before we go into the details, let's have a real think about the accounting process. Hopefully by now you are familiar with debits and credits. Debits being left, credits being right, and we use these to record increases and decreases to our elements of accounting: assets, liability, owner's equity, revenue, and expense. And you know that debits don't necessarily just equal increases, credits don't necessarily equal decreases. It is determined by the element that we're thinking about. And the process that I teach my guys is Paler to work through that. So with Paler, I can understand that increases I'm going to put above the line, decreases below the line. I only need to remember one: assets going up are a debit. That means assets going down is a credit. And then I can fill in the gaps like so to have essentially my cheat sheet on my debits and credits. So for example, I then know if I've got a liability going down, it must be a debit, and I'm going to write that on my left-hand side. And we need to be an expert at that, and I'm going to assume you are for the purposes of this video. So let's think about the formal accounting process. Firstly, you are going to be given a transaction, and the transaction is either going to come from a source document, or in accounting in year 12, we will list the transaction for you. Once you have identified the transaction and what's gone up and down, you will now record it in a general journal, then post it to a general ledger, and then and only then can we start to think about reports by doing trial balances, balance day adjustments, then reports, and then finally we give some advice. So the purpose of this video, and where are we up to in Unit 3 accounting, we're essentially up to this component. Can I identify a transaction, record it in the general journal, post it to a ledger, and then try and think about what my end balance in a trial balance are of my accounts. So as I've just mentioned, we are focusing on these steps. And a previous video, I discussed the general ledger. This one is going to focus on the general journal, so really the second part of this process. So what is the general journal? The general journal is simply where we record day-to-day transactions. We are going to record every single transaction that impacts our elements of accounts in this thing called a general journal. Its purpose and pure purpose is to record the debits and credits that impact our accounts or ledger accounts for every transaction. And we get this information from our business documents. So basically, anytime you have a debit or credit to record, it's recorded in your general journal first. And the rules of double entry accounting, as I mentioned before, Paler or just remembering a table, will determine whether you're doing a debit or a credit. What does our general journal look like? Just this. It is a template which just has 4 columns. We are going to record the date of the transaction, the details, and then whether there is a debit or a credit. And we know there always must be a debit and a credit because we know for every transaction, our debits equal our credits. So let's think about how we would use this to record a particular transaction. And this particular transaction is a really simple one. There has been a deposit of $80,000 by the business owner to commence the business. Now that would mean you would instantly do the analysis, and I always encourage you to do that before you do your general journal. You're going to recognize that cash is going up by $80,000. Cash is an asset, and then an asset going up must mean it is a debit. And I've got that because assets increasing are debits. I know my capital will also go up by $80,000. This is a owner's equity account. Owner's equity going up are credits. So I've actually done the analysis. Now I just need to put this formally into my general journal. My general journal will look like so. Firstly, step number 1, I record the date, March 4. What do we need to remember about the date? The date is always the actual date in which the transaction occurred. So it's always going to be the specific date. We don't wait to the end of the month, for example. It's the actual date it occurred. I'm then going to go to the details section. And my details section will look like this: cash at bank and capital. I've written just this. You might be tempted to write more, but you just write the detail. That is the name of the account affected. You don't write any more, just the name of the ledger account. So it's not going to be $80,000 of cash, nothing like that, just the ledger account name. You might also notice that one is indented. We'll talk about that in a second. I then am going to write in the debit column and the credit column the amounts, in this case $80,000. These columns show the amount of the debit and the credit to relate to the double entry. So we recognized here that our cash going up was a debit, capital was a credit, so I've written this like so. What do you notice? The capital account is indented because you write your credits with an indentation and your debits come first. Finally, we're going to write a narration, which is down here. This is the last thing to be done. So really you have 5 steps to this: the debit and credit, and then the narration. And the narration is just the details of the information that's occurred. It is a short explanation of what has occurred. You must always write afterwards the source document so they can go back to find the details. And then you're going to write a short explanation. You don't need to put the dollar amount here because the dollar amount has already been put down in your debit and credit column. If we understand that, we can then record any transaction in our general journal because we are going to do this analysis for any transaction, and if we can do that, we can record it in our general journal. So how do I think through this process? Because there is a lot of information here and it starts to feel a lot confusing. We've got debits and credits and new vocab. What is the simple thing to think through in terms of your process? I encourage all my students to do this 5-step process, which I modeled before. Firstly, identify all the accounts impacted by the transaction. So is it cash? Is it capital? Is it sales? What are the things that have been impacted by this transaction? Once you have all the names, determine whether this has resulted in an increase or a decrease for these accounts. And I recommend just simply putting a little arrow, an up or a down arrow, next to what your transaction. You are then going to use Paler, or your table that I've got on my top right, just here, to determine if this increase or decrease results in a debit or credit. Once you have done that process, then you can go to your general journal and record the transaction. And you're going to make sure in the details section you use the correct full account name with no abbreviations, just the ledger account name. Once you've done that, you're going to quickly not move on to the next one until you make sure that the analysis that you've done has resulted in your debits equaling your credits, because you know that is a rule of accounting. So what are some common mistakes that people make in the general journal? And it is impossible to get full marks if you make these mistakes, and these are ways that when you understand a transaction, we can still unfortunately lose marks. The thing before we go through the mistakes, I want you to think of the general journal as writing the instructions for how a transaction is going to be recorded. If you are going to make instructions, you're going to need perfect instructions. And these common mistakes make the instructions not perfect. What are the things that we have to do, and what are some mistakes? The date of the transactions must be in chronological order, the order that they occurred. Each transaction, your debits must equal your credits. There is clearly a mistake. If not, often if you identify the amount difference between your debits and credits, you can be that detective to work out what has gone wrong. The information put in the details must, and I cannot reinforce that more, must be the same as the ledger accounts. These should be full names with no abbreviations. Your accounting teacher will tell you if you are allowed to abbreviate a certain word. There is really only one or two in the entire course, and I just encourage you to do no abbreviations anyway. The narration should tell a story of what has happened. It must include the source document. We need this to complete the narration after every transaction, because not all transactions are similar, and we need to know what the transaction is. We need the source document number if we want to do some more investigation. Now, this is not a mistake because you will not lose mark, but in your solutions, and I encourage you to do this if you can, it is common to list your debits before your credits, and the credit entry will be indented to the right in the details section. Now, for those in my class will know that I have a lovely dog, Winnie, who is a golden retriever. And I like to think of the instructions and your general journal as you must follow the golden retriever principle. My golden retriever is beautiful, as you can see there. She is also, unfortunately, perhaps not the smartest dog in the universe. And she needs perfect instructions to do anything. If the door is only half open, my dog will stand there waiting for it to be fully opened. If she is standing on a table, she will get stuck there for an hour because she seems to not know how to get down. She is beautiful, but not smart. Now, your general journal posts or recording in your general journal must be perfect so that Winnie can use them to post in the general ledger. Your journal is your instructions on what to do in your ledger. You can only have perfect ledgers if you have perfect journals, because we use this information to post to the general ledger. So let's add another transaction to our general journal and then think about how this goes from our general journal all the way to our general ledger, which is, as you remember, the process that we use in Year 12 accounting. So here we have two transactions. The first one that we went through, for some reason the date has changed to March 1st, doesn't matter. And then the second transaction is I have borrowed $20,000 from a bank. That means my cash at bank, my asset, has increased, resulting in a debit. And I have a loan now that has also increased, a credit. I have two transactions, and I need to record them in the general ledger. And the technical term we use for that is posting. So if the question says post this to the general ledger, you're going to pick up your general journal transactions and post them to your general ledger. That's why we need the golden retriever principle. You need perfect instructions to be able to do this perfectly. So let's think this through. We know that debits equal left, and credits equal right. So my cash from my first transaction increased by $80,000. This was a debit, and this means that my asset increases, so I record a debit. On March 1, my capital, sorry, let's skip that for a second. My cash, which is an asset, went up by $80,000. And as you're practicing, I would recommend that you put an A next to your cash because you know it's an asset, and then you can go, all my increases are going to go on my left, my decreases on my right. My capital is an owner's equity account, which means increases are on my right, decreases are on my left, and my owner's equity also went up by $80,000. Now, you might be noticing, why have I written capital here and cash at bank in my cross-reference? The cross-reference is the opposite part of the transaction. It is when we do a debit of $80,000, I need to write in the cross-reference section, what is the other side of this transaction? What is the credit to this debit? And this was my capital account. My cross-reference in my capital account is cash at bank because I'm recording a credit. What was my debit? Cash at bank. We always name the other account affected in our cross-reference. What is the one or two accounts impacted to result in that debit or credit? That's why it's called a cross-reference. And if you think about our general journal template, you are writing a debit and you are writing a credit. And you have a general journal here in the details section, and you write the details there. When you are writing your debit in your ledger, you are crossing down to find the credit to record in your cross-reference. By far the most confusing part about ledgers, it is something that we really need to practice to make it second nature. The second transaction also increased our cash at bank because we took out a loan. So our cash went up again by $20,000, so a debit, and we have a loan that went up by $20,000 being a credit. Why, when they both go up, are they different? Because cash is an asset, loan is a liability. So our cash goes up, the other half is our loan, that goes up as well. The debit means it is on our left-hand side because we record our increases on our left for our asset. For our loan, which is a liability, we record our increases on our credit. Now again, we have a cross-reference. I'm recording a debit in my cash at bank account. So I do my cross-reference, write the credits that equals that amount being my loan, and vice versa for my loan ledger. And this is the cross-reference as we mentioned. Each transaction affects two ledger accounts. These accounts are inherently linked because your debits must equal your credits. So the cross-reference in terms of our technical definition specifies the link between these two accounts by identifying the accounts affected. Just like here, we have our cross-reference. What's an important thing to note? If you have a debit, for example, that equals $30,000, and this is as a result of two credits, one that is $25,000 and one that is $5,000, you write in your debit section the $30,000, your cross-reference is going to include not one account name, but the two that equal the $30,000. So keep that in mind. Again, something to practice. GST is often one that involves two things. So with that in mind, and we come to the end, I have got some transactions here that I've recorded in my general journal. I have made 10 mistakes here, and my challenge to you is to pause the video and to find all 10 mistakes. I'm going to go through the 10 really quickly, but can you find all 10 before you restart the video? I'll pause for a second. So hopefully you've identified the 10 or at least had a crack. Really quickly, what are my issues here? Number one, I hope that you recognize that the dates are not in chronological order. Number two, in this transaction, my debits do not equal my credits. 82 does not equal $80,000. What else is wrong here in my first transaction? Number three, I don't have a source document. So let's just write them down so we're all clear. No source doc. Debits do not equal credits. Dates not in order. What else have we made a mistake in? Number four, this transaction should result in my cash going up and my loan going up. These are debits and credits. I've put them around the wrong way. Number five, one that you wouldn't lose marks for, I should have indented the loan. Number six, you could argue I've said the amount of $20,000. I don't need to do that because it is in my debits and credits, the numbers. You're probably not going to get in trouble for that one. Number seven, really importantly, and number eight, so we're going to do them together. These are not ledger account names. You have not given perfect instruction. You don't need to write the 12 desks. What else do we have? Number nine, my debits do not equal my credits here. Number 10, no narration. And there might even be one or two other errors floating around as well. But these are some common errors that hopefully you identified really quickly. If you can identify them in mine, you can not make them in yours. And I hope that's a good showing of the things that we can make that are really simple errors. And unfortunately, most of these would have lost marks. Now, with that, I hope that you have achieved the learning intentions and success criteria. And to really achieve the success criteria, it's now really time to practice recording in General Journal and posting this to your general ledger.